co-founders of a startup named Wafer. And
Emata finances farmers, right? As we all know, Africa is renowned for agriculture. It's the largest industry across the continent, accounting for 15 to 30% of the GDP of the economies. But banks tend not to finance agriculture. If we look at the numbers, agriculture only attracts a few percent of all the lending, yet it's super important for the economies. And that is because banks find it very difficult to finance farmers, right? There are many of them, but they want small loans, they don't have formal income statements, they're often based in remote areas, so they really struggle with that. And we have solved that by digitizing the entire process. So no matter the size of the farmer, they can come to us and we give them the loan that they need. Obviously, running and starting a startup in Africa is very, very difficult. So we thought it was very useful to learn from the best, to make sure that, right, they can guide us through what's going to come next. They can guide us through, right, what investors want to see before you can get funded. And of course, meeting other startups who are on the same journey, maybe a little bit behind you or maybe a little bit ahead of you, and sort of sharing, insights from them and experience with them. It really helps you to make sure that you can develop faster, on our own journey to become successful. Yes, of course. So far we have raised $1.3 million in non-dilutive funding, meaning, right, this is funding that we hadn't given away equity for. I must say that's actually one of the advantages of being in Africa, where a lot of these opportunities exist compared to other markets elsewhere in the world. We're actually currently raising our first equity round, which is fairly modest, about $350,000, and we hope to close it in the coming 4 to 6 weeks.